Welcome to this lesson on tax withholding. When you receive your paycheck, you'll notice that the amount you take home is less than what you actually earned. This difference is due to tax withholding, where your employer deducts taxes from your pay before you receive it. Understanding how this works is crucial for managing your finances and avoiding surprises at tax time. Throughout this lesson, you'll learn exactly what withholding is, why it exists, and how it affects your paycheck. Tax withholding is a system where your employer automatically takes money out of your paycheck and sends it directly to the Internal Revenue Service, or IRS, on your behalf. Instead of waiting until the end of the year to collect all your taxes at once, the government receives payments from you gradually throughout the year. This means every time you get paid, a portion of your earnings goes straight to the IRS to cover your tax obligations. Your employer acts as the middleman in this process, calculating and transferring these funds for you. There are three main types of taxes that get withheld from your paycheck. First is federal income tax, which varies based on how much you earn and the information you provide on your W-4 form. Second is Social Security tax, which is set at 6.2% of your wages. This tax helps fund retirement and disability benefits. Third is Medicare tax, which is 1.45% of your wages and helps pay for health care for seniors. These three taxes are automatically calculated and deducted every pay period. When you start a new job, one of the first forms you'll complete is the W-4 form. This is an essential document that tells your employer exactly how much federal income tax to withhold from your paychecks. The form asks about your filing status, such as whether you're single or married, and whether you have any dependents like children. The information you provide helps your employer calculate the right amount of tax to withhold. Getting this form right is important because it determines how much money you'll take home each pay period. Tax withholding exists for two important reasons. First, it ensures that you pay your taxes gradually throughout the entire year rather than in one large sum. This makes tax payments more manageable and prevents you from accumulating a huge tax debt. Second, withholding helps you avoid facing a large, unexpected tax bill when you file your annual tax return in April. By spreading your tax payments across the year, you're essentially paying as you go, which makes budgeting easier and reduces financial stress at tax time. Let's look at a typical paycheck example to see how withholding works in practice. Suppose your gross pay, which is your earnings before any deductions, is $3,000. From this amount, $360 is withheld for federal income tax. Then $186 goes to Social Security and $44 goes to Medicare. After all these deductions, your net pay, which is the actual amount deposited into your bank account, comes out to $2,410. This is the money you actually get to spend. It's important to get your withholding amount just right. If too much tax is withheld from your paychecks, you'll receive a large refund when you file your tax return. While getting money back sounds nice, it means you've been giving the government an interest-free loan all year. On the other hand, if too little is withheld, you'll end up owing money when you file your taxes, which can be financially stressful. You can adjust your withholding by submitting a new W-4 form to your employer anytime your financial situation changes. Let's review the most important points about tax withholding. First, withholding ensures you make steady tax payments throughout the year, avoiding a massive bill in April. Second, your W-4 form is the key tool that controls exactly how much money gets withheld from each paycheck, so fill it out carefully. Third, remember to review and adjust your withholding whenever you experience major life changes, such as getting married, having a child, or buying a home. These changes can significantly affect your tax situation, and updating your withholding helps you avoid surprises at tax time.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.